welcome back to another video here at FiscalVoyage. My name is Felix, and in this video we're going to do a deep dive on IBM. They just announced the third quarter press release, and we'll go look into that press release. We're going to look at the income statement, the balance sheet, as well as the cash flow, and determine how well or did IBM do or didn't do. But before we get started, if you're new to the channel, make sure you hit that subscribe button, as well as check out my free ebook in the description below. This report for IBM earnings release for the third quarter. You can see here IBM earnings per share and revenue in line. Q3 non-GAAP earnings per share of $2.58 is in line with estimates, and GAAP earnings per share of $1.89 missed by 19 cents. Revenue is down 2.6% year over year. Here's a bright spot here. Adjusted gross margin of 49% versus consensus of 48.6%, so there's a nice increase, and it's better than the 48% that was attained in the last quarter, Q2. You can see here the pre-market right now as this video shares is up slightly at 0.3%. Let's go more in detail in the press release for IBM third quarter results. Harveen Karnish, IBM Chief Executive Officer, said the strong performance of our cloud business led by Red Hat underscores the growing client adoption of our open hybrid cloud platform. Separating the managed infrastructure service business creates a market-leading standalone company and further sharpens our focus on IBM's open hybrid cloud platform and AI capabilities. This will accelerate our growth strategy and better position IBM to seize a $1 trillion hybrid cloud opportunity. So this is very huge. If you guys are not aware of IBM, sometime next year, maybe Q3 or Q4 of 2021, IBM plans to split the company up from the cloud business and the other portion of the business. So it'll be two companies by sometime third quarter, fourth quarter of next year. Let's look at some of the highlights for the quarter. Operating non-GAAP earnings per share, as you saw, $2.58. Total revenue at $17.6 billion, down 2.6% compared to the second quarter or third quarter of 2019. There's a bright spot here. Total cloud revenue of $6 billion, up 19%. So that's a huge increase. That might present why the company's up slightly after hours. You can see here Red Hat revenue up 17%, up 16% adjusting for currency. GAAP gross profit margin of 48%, up 180 basis point. And last year gross profit margin 49%, up 160 basis point. Last year they had about 47%, I think it was, or 48% in gross profit margin. So there's improvement there, so that's positive. Net cash of operating activities of $15.8 billion and free cash flow of $10.8 billion over the past 12 months. So here you see the revenue by segment. Here you have the cloud and cognitive software. You can see here for the quarter they made $5 billion and $500 million there, higher than 2019, and you can see over the past 9 months it is higher. But overall, the entire other segments, 5 different segments or source of revenues, is down actually here. As you can see here for the first 9 months for the fiscal year 2020. So you can see here overall the company revenue is down based on the compared to 2019. Of course, with the economic shutdown and such, but it's not down too bad. It's down about $2 billion in revenue. It does hurt, but it could have been much worse. But overall, I'm kind of happy with the performance that the company has been producing. You can see here total gross profit margin 47% for the 9 months versus basically 46%. So it's a nice 1% increase there. Net income also is down. You can see here for the first 9 months they made $4 million in profit versus $5.7 billion in profit for net income. So you can see net income, it is down about $1.5 billion. Since net income is down, that did affect the earnings. You can see here for the first 9 months they earned $6.45 versus $4.72 currently for the fiscal year 2020 first 9 months. But this year, you can see here, third quarter is higher slightly by a couple penny here for the dilution of earnings, and basic earnings is up by a penny here. But overall, it is down for the first 9 months. So we look at the cash and cash equivalent and look at the balance sheet for IBM. You can see here they had a huge increase in cash. You can see here from $8 billion to now $14 billion in cash. So that's very impressive. We look at the free cash flow to see where they got that from. Total current asset is a slight increase of about 1.2 or $1.3 billion here. So that's positive there. Total asset up about $2 billion here, so that's good there. Like assets to continue to increase. However, total liability did increase, but total asset increased slightly higher. Total liability increased about I'll say 400 million or so. No, maybe 1 billion or so in total liability increase. Most of that increase of about a billion or 2 billion came from short-term debt. As you can see here, it was 8.7 billion. Currently now is 10.2 or 10.3 billion in short-term debt. So they had to. But the good thing is that the company does have 14 billion in cash, which they could able to pay this off very quickly. Total IBM stockholder equity is up as well, about a billion or so. That's positive there. Total equity you can see here, and total liability and equity is up here. If we look at the cash flow analysis here from IBM, you can see here acquisition. This was the acquisition of Red Hat. You can see here 32 billion in 2019 for the 3 months ending September 30, compared to now 17 million here. They did not purchase shares. You can see here they did purchase $126 million worth of shares in 2019. Overall this year, for the first 9 months, they have not purchased, done any buybacks thus far. They did here, you can see here 1.3 million or billion for 2019. Overall this year they have not purchased any share buybacks. And if we look at the cash flow statement here, you can see here the company operating activity came in at 12 billion versus 11 billion for 2019. So that's very positive there. Minus capital expenditures of 2.2 billion. You can see here, so that gives you around a 10 billion in free cash flow, and the dividend payment of 4 billion. So the dividend is very well covered. Looks about 60% payout ratio based on free cash flow. Much better payout ratio than the previous year at the first 9 months. So that's positive there. You can see here as well, this dividend is very well covered for the third 3 months as well as the 9 months so far this year. So the dividend is very well covered. I'm happy about that. So you can see here net change in cash is up 6 billion compared to a loss of 1 billion in the first 9 months of 2019. So overall the income statement, the balance sheet, and the cash flow statement looks pretty good for IBM in this quarter. So I'm happy about that. We look at the margin. So we look at here the gross profit margin. You can see here 48.1% for the 9 months. And 46.5% for the first 9 months of 2019. So you see there's a nice improvement there. Let's compare some more percentage here. There's a decrease here in income margin from continued operation of 11.1% first 9 months of 2020 compared to a 13.1% for fiscal year 2019. But overall, I'm happy with how the performance of IBM. If we look at Morningstar currently gives IBM a 3-star rating, so it's kind of like a hold. It's fairly valued currently. You can see here some of the key ratios. Revenue has been in decline about 1%. Net income also in decline about 7%. But you just saw they had a pretty, net income is also down, but not too bad for considering how 2020 has been. We look at the debt to equity ratio is pretty high here at 3.39. Again, they do have a lot of cash to be able to pay out the short-term debt, so this should definitely help with that. Interest coverage is very well covered at almost 6 ratio. The current ratio is low at 1.04, but overall the balance sheet looks good for IBM. It does have an S&P credit rating of A, As you can see here, long-term debt at 65. That's why the debt to equity ratio is pretty high there. But overall, if we look at the fast graph, you can see here that the company looks to be fairly valued, kind of like what Morningstar mentioned. It does have a nice earnings yield of about 9%, and the dividend yield is very attractive, 5.18%. But if we look at the expected earnings growth, you can see here total annual rate of return is low at 8.3%. This is more kind of for a dividend investor in the sense that looking for income because of the high yield, and the payout ratio for the dividend is very well covered in earnings as well as free cash flow, as we just talked about. You can see here free cash flow very well covers the dividend, so the dividend is very well covered and safe. And actually, when the company splits sometime next year, the dividend is going to be the same payment at that time period. But overall, I'm happy with the press release, and let's see how IBM, the market, thinks of how well IBM did or didn't do. So there you have it. Those are my thoughts on the IBM press release. The company revenues continue to decrease. Net income also was down for the first 9 months, but with the cloud revenue growth, it looks positive for IBM. But we'll see the fourth quarter and next year and continue and look at IBM. But right now the dividend is well covered, very nice dividend yield at 5%. As you can saw with fast graph, earnings are expected to start growing next year and the following year, so we'll see how that goes. So thanks for watching, and I'll see you guys in the next video, and make sure to hit the subscribe button, and as well as check out my free ebook in the description below.